So what are some of the things that you need to look for when you're evaluating a self-storage deal? Well, before I even look at the actual facility, I'm evaluating the market. I'm looking at the demographics. One thing that is super, super important for you to know is that you can be the best self-storage owner operator in the country. But if I put you in a bad market that doesn't have good demographics, you're going to struggle because you can't fix the market. Now, conversely, you can be a subpar or an average self-storage owner operator, and if you get dropped in the right market, you're likely going to thrive. Okay, so choosing the market is critical. Before I even look at the storage facility, I look at the financials. I'm evaluating the market and saying, is that a market that I want to be in? Does it fit in my buy box blueprint? And by the way, if you don't have a buy box blueprint, click the link below. We created a custom AI tool that if you just follow the prompts, literally within 5 to 7 minutes, it'll give you your buy box blueprint. It'll give you clarity. It'll give you confidence so that you know exactly what type of storage facility in what type of market you want to go after. So when it comes to the demographics, I'm looking for typically population between 8 to 10,000 all the way up to 60 to 80,000 people. So let's say 8 to 80,000 people. I want the average medium household income to be north of $50,000 a year. That is very, very important. I can tell you some challenging stories I've had from managing and operating facilities in rough markets that didn't quite have good demographics. And then I want to make sure that there's good population and job growth coming in. Are people moving into the city? Are jobs coming in? Are they putting capital and growing the infrastructure of the city? That's super, super important. Now, there's a lot to talk about when it comes to the facility. I'm looking at the occupancy. I'm looking at the condition of the facility. But one of the things that I always evaluate is how can I generate more revenue? Okay, one of the things I love about self-storage is the fact that it has all these different income streams. Let me give you an example of one of the income streams. So if we come right over here, this particular door, so unit 43, there actually used to be a Coke machine there, okay? So when I looked at this deal back in 2022 and we first got here, number one, it didn't look like this, okay? We put brand new siding, and I'll talk about some of the work that we've done to this facility. But right here, one of the things I always look at is how do we maximize the business? How do we generate the most amount of revenue we can with a self-storage facility? And we noticed, and we asked the seller, we said, how much just income, ballpark, how much money does this Coke machine generate? And it was like maybe they had generated a couple $100s for the entire year. And that space is about 5 feet by 4 and some change, almost a 5 by 5. When we went to the market and we looked at the competitors in terms of the rates that they were charging for 5 by 5s, we realized that that unit could rent anywhere between $30 and $50 a month. And so our thought was, okay, well, why don't we take out the Coke machine? We actually thought about selling it. In fact, we just had somebody come, they picked it up for free. We broom swept the unit. We didn't really have to do anything. All we had to do was add a frame and a door. And within a month, we were able to get that space online, and it has generated thousands of dollars for us over the last 3 years. Today, that unit rents, it's actually rented right now, so I can't show it to you, but it rents for $34 a month. And that is a whole lot more revenue than it would have generated had we just left the Coke machine in there. So that's one of the things I really want to encourage you to think about when you're looking at a self-storage opportunity is how can you maximize every square inch, every net rentable square foot of this facility to generate revenue. Now, there's a lot of different ways you could generate revenue. The most immediate way that we look at are the rental rates. Okay, so we have at this facility, we have a lot of different sizes from 5 by 5s, 5 by 8s, 10 by 10s, 10 by 15s, 10 by 20s, even all the way up to 10 by 30s. And we're always looking at, okay, what are the rates that we're charging here relative to the rates of the market? And when we're looking at self-storage, we're looking at the storage facilities within a 5-mile radius. That is our competition. And that's something that we call revenue rate management. So on a monthly basis, we are keeping an eye on the competitors. We're seeing what they're charging. And we want to make sure that not only are we competitive, but that we're constantly putting upward pressure on the street rates. Okay, so there are times where you're in lease-up mode and occupancy isn't as healthy as you'd like it to be. You haven't quite gotten to a point of stabilization where you might need to offer promotions. You might need to offer different, sorry, and that is real life. I should have had this on silent. But those are things that you want to do. So right now we're offering on some units where we have a lot of occupancy. We're offering 50% off for the first 3 months. We have tested dollar promotions, dollar move-ins. So there's different things that you need to do when it comes to revenue rate management. It's interesting because sometimes people say self-storage is passive, and that isn't quite the full story. I like to believe that once you get a facility to semi It can be semi-passive once it's fully stabilized. And when I say fully stabilized, I'm talking 85 to 90% occupancy. So right now we have some units that we're working on filling up. We're actually on site, not only creating some content, but we're getting some drone footage. We're updating the pictures. We're refreshing our website because those things are really, really important to Google My Business. We're also looking at improving our online presence. We're talking about the lighting, the security. What are the things that a storage facility needs in order to generate as much revenue as possible? So we're looking at the competition on a monthly basis. We're looking at what we have to do in terms of not just the upkeep of the facility, but making sure that customers know they have a storage facility that is safe, secure, well lit, good cameras, and that is what's going to bring more people. That's what's going to give you more reviews, which is going to give you a stronger online presence. It'll help you generate more rentals, more revenue, and ultimately more income. So there's a lot of different things you can do. One of the things I really love about self-storage is maximizing all the different ways that we can generate revenue. Here's a perfect example right here. So if you look up, this is an actual tower that I was very interested in this facility, partially because of this. I thought, and I didn't know, I'll tell you the quick story, but I thought that if we bought this storage facility, we would own this cell phone tower and we would be able to generate additional revenue on the cell phone tower. Well, I quickly found out from the previous owner that he actually sold this little tiny parcel to somebody else. So he generated a good amount of money selling this. But what happened is that an eagle decided to nest up there. And so now my understanding is this tower is not operational. So we can't generate any revenue from this tower. Not only do we not own it, but whoever bought it, now they just have a really long metal, or I don't even know what this is made of, but they got a long pole that they can't do anything with because there's an eagle up there. But we're looking at rental rates. We're looking at fee income, right? So when somebody is late, how much do we charge them? We're looking at gate fees, lock fees, auction fees. If we have to auction off somebody's units, that's also another income stream. It's not a big income stream. We don't really make a lot of money when we auction people's units off when they don't pay. However, what we are most interested in is how quickly can we get that unit back online so that we can rent it. You may have heard me say this in another video, but the most expensive thing in storage is a vacant unit that isn't being rented. So what I want to leave you with is this. When you're looking at a self-storage facility, look at all the different ways that you can maximize the revenue at that storage facility. Again, I'm not only talking about the rental rates, but I'm talking about, is there some space that you can convert into an additional unit? Does it have space where you can erect a building, or you can put a box well, which is basically a portable unit? Now, it's important that you understand the supply and demand metrics of storage in that particular market. The last thing you want to do is do ground up development or put some additional storage space only to realize that you're not going to be able to rent it. Okay, this is not Field of Dreams. It's not build it and they will come. That's the wrong mentality. That'll cost you a lot of money, give you a lot of headaches. But there's a lot of different ways that you can maximize the value of a storage facility. From, as a summary, the rental rates, the fee income like tenant protection, lock fees, gate fees, admin fees. Is there a tower? Could you put a billboard on site? Could you rent space, additional space? This is another opportunity for us. When we bought this facility, the parking was an absolute mess and it wasn't organized. We had cars that were parked however they wanted to be parked. So not only did we get signage, but we were able to maximize and put some additional parking spaces. That's generated thousands of dollars for us on an annual basis, which has a big, big impact on the overall value of the facility. So whenever you're looking at an opportunity, I want you to put your money goggles on. Think about all the different ways that you can generate more revenue with that facility, because that's how you're going to make more cash flow. That's how you're going to build long-term wealth. And if you ever decide to sell that facility or do a cash out refi, the net operating income is going to be a huge driver of how much you're going to be able to sell that facility for. So with that being said, make sure that you're subscribed here. If you have any questions, feel free to reach out. And if you want to learn more about our coaching community, where we teach you how to find, analyze, fund, buy, manage, and operate these storage facilities, even if you don't have money, wherever you live in the country, head over to storagewins.com/call, book a discovery call, and we'll go from there. Have an amazing one.